Hey there, all my friends who are passionate about innovating. Here's a new case study for you that I was just so excited to share. My recent article, which is based off of a Linda Hill case study from her and her co author's latest book, Genius at Scale, focuses on Mastercard. And I had the privilege of listening to Linda deliver this case study, which you're going to be able to watch because I video recorded it. Um, just last week. And in it, I started thinking a lot, not about the financial services industry, but actually about grid modernization, because I spend so much of my time with utilities and we care so passionately about what is it going to take to modernize this grid to meet the grid of the future. And I started comparing MasterCard to utilities and grid modernization because, well, what was MasterCard? Basically, a utility, a provider of payment services with millions of transactions relying on it every single day. Similar to a utility, MasterCard was highly regulated, had to have extremely high reliability, and trust could not be broken with their consumers. So the case study starts in 2010 when MasterCard was a little bit concerned about their future. And in a survey to all employees, about 7,000 employees, they asked what would be the most important thing to focus on for their future. Innovation ranked 26 out of 27 factors. This was so important for me to share, especially with my friends in the utility and energy industry, because I hear y'all. You reach out to me, and this is exactly what you're telling me is happening. And you want the answer. You want to know what could you be doing differently. I think this case study would be an excellent start. Share it with your team. What is the worst thing that could happen? What if there was the ability to focus more of your time, not just on the core, but on the future? The results from MasterCard speak for themselves. In about 10 years, instead of getting disrupted, MasterCard grew by 800%. And that all happened in a very risk averse, highly regulated industry. So I think MasterCard has the answer for so many of you who have been reaching out and asking me what you can do. Share the video and Linda's talk with a friend.
So the first one is about Ajay. And I don't know if you all know or have heard of Ajay Banga, but Ajay is now the head of the World Bank. So for sure, he is impacting our world because he is the head of the World Bank. But we studied him when he was at Mastercard, and I'm just going to describe how he did that and what changes he made at Mastercard because this is about a transformation. The organization really was not an organization that was very innovative at the time. Now, I want to say, again, this is used, I'm using financials here, but to get this kind of success and create this kind of market value is really unusual. And what I want to point out about it is first off, he didn't focus, he didn't focus on how we're going to create market value. Instead, he focused on how we're going to service our customers and a more diverse body of customers. And I'm going to talk to you about that. But the reason why he was able to have this success is really because the culture, and he would tell you this, and everyone would tell you this, that they changed their culture and their capabilities. And what's most important, I think, to think about here is that, you know what, it doesn't show up financially for a while in some ways because innovation takes time and culture change takes time. But when he first went into the company, he asked people, how important is innovation? And they did an employee survey, and out of 27 factors, innovation was number 26. By the time they left, or he left actually after 10 years, innovation was ranked number one or two by everybody. So everybody began to understand that it was their job to be in box one, to think about both shoulds and coulds. The other thing you see happening here that I just want to point out, because there might be a parallel in your own context, is when MasterCard, when he first started, the only customer they had were banks. They only service banks, but he thought for them to grow and diversify and avoid being disrupted by fintech companies, they had to learn how to work with all kinds of customers. And so, as you may or may not know, if you have, I don't know what phones you have, if you have an Apple phone or you have an Android phone, The rails for that, the infrastructure for those pay systems, Apple Pay and Android Pay, are actually from Mastercard. So they actually became more of a tech company. But to do that, again, he would not say it was the tech. It was, if you will, our culture that allowed us to innovate with the tech and service new clients that made the difference. So the first thing he did was he said, we don't seem to have a shared sense of purpose. What are our values? What matters to us? And he concluded, and it was somewhat controversial, I would say, that financial inclusion is what mattered to them. Financial inclusion, they're all of these individuals, they're all these SMEs, these small and medium-sized businesses that don't have access to the financial system. So they can't grow their businesses. They can't be successful and feed their families. So what we want to do, our purpose is going to be making sure everyone is included in the economy. And then the second thing he said is the only way we can do that is if we do provide financial services in a very affordable way, in a frugal way. And that means making these services available on mobile phones because that is what farmers in Nigeria have. They have a mobile phone, and we need to develop products. They don't have credit cards, none of that. We have to develop products that can serve them as they're on their phones because that's what they have. So that is how he talked about purpose and spent a lot of time having people think about how can you contribute to this. So what he said was, we're going to grow our core business. They weren't throwing out credit cards or, they were still going to service people that had those. But then we're going to diversify and build new businesses for new customers. And that means also bringing in new people, different kinds of people than we've had working here before, not all ex-bankers. But he said, and I'm just going to build this really quickly because we don't really need to look at this, but what he said, and I think it's rather similar to what you all have done, he said 50% of your resources and time should be on growing the core business. 50%. He said 50 as opposed to 80. And 50% needs to be focused on diversifying and building new businesses. And this was because he wanted to create a sense of urgency and they could be disrupted by fintech. So everyone was shocked. 50% on the core and 50% on the future? He said, yes. And if you bring a budget to me or you tell me when you look at your calendar, you're not spending time that way, then you're not really future-proofing the company. We're not going to be ready for the future. So he was very explicit. But then what he worked mostly on was culture. And I want to emphasize a couple of things about it. They called the culture the Mastercard way, and they called it DQ. And for those of you who know the US at all, although DQ, I guess they do have DQ in China. I discovered in Shanghai and in Wuhan, and that is Dairy Queen. It's an ice cream chain. And when I was a little girl, if my parents had a little extra money and something good was happening around us, my father would put us all in the car, my father and mother, and they would take us to Dairy Queen to get ice cream. And this was a very, very special occasion for us. Very special. And I will tell you that when I heard him say DQ, and he said it intentionally, he even says it at the World Bank, for people who are from the US, they immediately think of ice cream. And that doesn't feel serious. We're talking about financial inclusion but here's the CEO of our company and the head of the World Bank talking about DQ. What does DQ mean? DQ means decency quotient. Decency. He said, what it means is anyone you meet, whether it's a colleague or a customer, a supplier, you need to be decent to those people. Well, decent isn't, that's not very aspirational. Who's going to tell the CEO, I don't want to be decent? What does decent mean? So decent, he said, meant if your colleague sends you an email and asks you a question or makes a request, you answer those emails. And it turned out many people weren't answering. We all get lots of emails. I must say, I find it hard to answer all of these, but it's decent to simply answer it. And guess what? If someone doesn't answer your email within a week, you can just assume that they said yes. So people began to answer emails. So he thought about purpose, but he also role modeled the micro behaviors that could make a difference. And what you see in the culture, in the middle of it is relentless focus on our customers. Everything we do needs to have a positive impact on our customers. That is the heart of the organization. And you can see be inclusive, forces for good, unlock potential. You can see the values, own it, be accountable. So these were the values that he and his colleagues worked on instilling in the organization. And they ended up coming up with metrics to measure that. And I'm not going to go through all these metrics with you, but I want to point out a couple. One is, and a lot of this was trying to get people, and right now it's very frightening for some people to adopt AI because, in fact, they're worried that, they're going to lose their jobs as a consequence. Although they're trying to do AI in a way that's more augmenting people's talents than replacing them. But that's one piece of it. They had to have metrics. They wanted people to be engaged. But what I want to point out is under number two, ideas killed and how quickly they were killed. It turns out that when you start to experiment, or if you're trying to experiment and your project doesn't work, many of us can be reluctant to let go of that project because it's our project. But he said, no, we need to kill the projects quickly. If the data come back and say, not working, you need to be willing to give up your product, your idea, and move to another one. And the idea here was fall in love with the problem of the customer. Do not fall in love with your solution. Fall in love with the problem of the customer. Do not fall in love with your solution. Many, many organizations I see, and all of us in some ways, we love our ideas, we love our solutions, but sometimes they're not working and they need to be adapted in ways, and we're not hearing other people are trying to give us that feedback, or we see it in the data and we need to make sure to let them go. So if you killed your own idea, at Mastercard, he gave you a bonus because he really wanted to get people to get that experimental mindset. It's not a pilot that if it doesn't work, it means, you weren't right or you were wrong. It's simply an experiment we're running, like those working hypotheses that Dr. Rick Surrey talked about. And once you see that the hypothesis doesn't seem to be proved correct, you need to let it go. So just wanted to point that one out because that's something that I see many companies struggle with.